Good morning, techies and scientists. Welcome to the channel. Don't you hate it every time you're trying to go live? That's when they have an update for you. Like right before I go live, they say, okay, then you have to update this, and your computer is about to reboot in about 2 minutes or 5 minutes or so. And if you don't reboot now, then it's gonna reboot on you in the middle of a live stream. Mm, 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 mm. Anyway, that's already throwing me off. Yep, I think I can hear myself. Okay. So today I decided to go in a little bit early, even though I planned for at 9:15. So I ended up coming online at 9:40 Eastern. And instead of, I usually have a live stream on Wednesdays, but this time because I have some personal things I have to attend to tomorrow. So instead of canceling the live stream for the entire week, I decided let me just do it now, do it today. But next month it'll probably be the same schedule, usually on Wednesdays at 10:30. Again, I apologize for starting this a little bit late. All right, so what we're going to do today is go to the same pace that we usually do, taking a look at the daily and highlight some key levels. As you can see, I already highlighted some levels based on yesterday. And as you can see, price is respecting all those levels into the Fibonacci. And then also we'll take a look at the daily setup, the 1 hour setup, and then like a right other one after 10 a.m. we'll start taking some trades there. Yeah, I can see the people coming in. Thank you for joining in. I appreciate you all. All right, so let's go ahead and let's get this set up. All right, so I always do like I always do. We'll always go back to the daily to see where we are, where we come from, and where price is trying to go to. If there was a simpler way to do this. Okay. Now let me take it down to another simple thing we can see. This one is cleaner. All right. So as you can see, the range for October 9 and 10, we finally came out of that range. We came out of it on Friday. I think that's Friday. 10/24. Day was that? Yep. So we came out of it. So we spent 2 weeks inside of that range. You see how long we can spend on the daily inside of a range? 2 weeks. From the 10th to the 24th, we finally come out. And when price opened on Sunday, we had a huge gap up. Apparently, if you watch my video about the prognostication, I was anticipating that price will probably go a little bit lower and then go higher. Even though that did not happen, that doesn't mean that it will not happen. So, meaning that you have this huge gap here, it doesn't mean that price will not go a certain level and then will trace all the way back down to the level that I mentioned earlier in the week, which I believe was, yeah, it was 125, 163. That doesn't mean it will not or cannot come back down there. It just means that for now, this is the play. Go up and then at some point it may come back down. So this is the setup. This is where we are right now. So looking at the daily, there's not much we can do. So what we can do here is put a fib on top here, put a fib that in this below, in the middle of this the body of the candle, and then we can measure what price is trying to do. And because of where price is, there are no levels on the left you can look at and say, "Hey, listen, I'm gonna take some level. I'm gonna take a trade based on this level on top." So what we'll probably end up doing is drop down to the 1 hour, to the 4 hour, 1 hour, and then put a fib there, the Fibonacci, to see if we can see some actions there. So let me go ahead and change this back because we're going to trade the micro, not the actual mini. And as you can see, I have a busy graph here. I'm gonna take some things off. I don't think I should have done that. I feel like for some reason I should have done that. I feel like I took out a few things. That's okay. Whatever I deleted, I am positive I can get it back. This one is locked. So let's see here. So I have to unlock it. So this is the difference between when I cut a video versus when I'm doing it live. When I'm doing it live, you can see all the mistake that I'm making, the pausing and everything. But when it's edited, I can remove all of this, so you don't have to see me struggling with creating the Fibonacci and everything. I guess it's part of being human, right? It's not perfect, but you make it work. But unfortunately, you're gonna have to sit through this and watch me do all of that. Okay, so this is our hourly setup, and this is our daily setup, and then I will go down into the hourly setup. Let's go to the 4 hour first. And by the time you put into the 4 hour, you can see there's a big body compared to the wick that we saw on the daily. So let's take a look at this. So there's no need for me to put a Fibonacci on the 4 hour. So let's keep dropping down to the 1 hour and see if there's a wick we can take some actions on. Okay, so we gotta have to squeeze it in. Yeah, nothing to see here except for this one. Okay. All right, so let's take it back down to a 5 minute. And I feel like the Fibonacci that I deleted was in reference to, okay, what's going on here? I have to wait for it. Okay. So yeah, I think it's probably the PM session range. That's what I deleted. So let me go ahead and add back the PM session range. We started at 1:25, 1:30 p.m. Let's just do it like this. Okay. So we do have a framework. We do have a time range of things we can work through. Let's break it down into the 1 minute. Okay, so what do we have? So we have the daily here. Let me make sure I can highlight the daily. Okay, I guess the update is not working for me because it won't let me type. Wow. Okay, interesting. Yeah, things go always go wrong when you're going live. All right, so what we have right now, we have the PM range session. We have a daily wick. So price open up at let's see, price open up at 9:30. So obviously there's a huge gap from today to yesterday. Now, as price, everything's going wrong today. So our price went up at 9:30. 9:31, we have a big gap here. So what we're going to do, or what I should have been doing, is highlighting that gap. And as price went through that gap, I would have been able to go short from here. Okay, but it's not too late. I can still place a trade here. So price may jump all the way back in there and still try to go short. So once I go short here, what I'm aiming for is to get a partial here at 26.25 and then have my terminus at 25.94, which is going to bode well into getting into the yesterday's PM range, which is the afternoon range. Usually when you have a big range like this, especially for the PM session, what you usually will see is price will usually try to trade back into it. So this is what we see here. Seems like price got into my trade and automatically stopped me out. That's okay. And usually you usually will get that folks. So when you usually try to get in and you think it's gonna nicely get into it and then fall back down, that's usually not the case. But it is 9:56, and I believe we do have a news driver coming up. It's Tuesday. Yeah, we have consumer confidence. So what I will do is just wait after 10 a.m. and then I'll just place in another trade. So I do get losses too. I do suffer from losses, and this is one of those losses that there's nothing you could do about it, right? You I didn't chase price. I waited for the price to go short here, and it went way above and beyond and stopped me out. And this is why you always have to trade with stop loss, because it prevents you from suffering more losses than you anticipated. So we have about 3 minutes left before we get into the consumer confidence report. I think it's consumer. Yeah, consumer confidence report. Again, I'm gonna wait after 10 a.m. and to see what side is trying to do. And then this is what you're going to see. It's literally it make that big up gap here, and then what it's gonna do is end up going down much lower than I anticipated. I mean, I would love to go in for another short right now, but with that news report coming out at 10 a.m., you just gotta sit out and wait it out. Otherwise, you're gonna get another one of those movements like this again. 10 a.m. is gonna come up and it's gonna shoot right out again and then stop you out. So the way I set up my trade is I have all this pre-set up as far as placing a trade is concerned. If you're using Ninja Trader, so I have it like a 10 point stop loss and then a 30 points gain, and then I have a 20 stop loss and then a 50 points gain. So what is that? 2.5. Yeah. So 1 to 2. So I risk 20 to make 50, but I usually take partials along the way. And why I take partials is because the nature of trading, right? When you put in a trade, you don't know exactly if it's going to reach to your target. I have an idea where it's trying to go. Well, what I may end up doing, it may go like, let's say for example I go short here. It may end up going here, go much lower, and then spike back up. So I want to be able to have at least some gains, some commissions, right? To make sure that I don't completely get into or a lot loss. So this is 10 a.m. right now. Yeah, not much. There's no movement. So what happened here at 9:57, or what was almost like 9:56? I was expecting that at 10 a.m., but I guess they're getting a little bit early, and now we have the consumer confidence, and there wasn't much. So right now, when you look at this, it's like, okay, which side is it trying to go? Is it trying to go up? Is it trying to go down? I mean, it's all over the place. And this is what I call like the condition is very difficult. So when the market like right around 8:56, you have the market going sideways, and then bam, it was very quick trade, and then it reach up, then go sideways again, and then quick burst, and then reverse, and then go sideways up, quick burst, go down. Like all this area right here, it's hard conditions. It's a lot of resistance. It's a lot of back and forth. It's a lot of wicks. You don't see that many gaps in between. And the pulse of the market is something. This is a topic I will cover sometimes in the future. So, what is the pulse of the market? This is that right here. So, you're looking at all these gaps. It's just like a runner, a sprinter. If you're running really, really, really fast, you're gonna take some break. So what you see here, it run really fast, and then take a break, go sideways, try to decide what to do, and then bam, you start running again, and then reverse and go back again, and then now it's taking the breather. Just think about it as an athlete. Whenever you see price keep going up like this, resist the urge to chase it. Which is why I always say do not chase price, because that's usually the signature. What you usually do is have a quick run up, and you psychologically you're thinking, okay, this is an opportunity for me to get in and participate on the action before it's too late. And next thing you know, you get burned or it reverse on you. All right, so let me see if I can take a quick short here. What is that? I don't know what I did. And he really wants to do the same thing again. Man, what is going on today? It's just that one the moment it hits, my trade, that's when it wants to get animated in the opposite direction. I think what I'm going to do next is drop it to the 1 hour. I failed to do that. Well, now that we have a new hour, I don't know why it's called 10 a.m. because you just turned 10. They make it look like 10 a.m. is in the back, but it's actually just turned 10. All right. So this is what we're going to do. And you're gonna see why when I put it in the 1 hour, you're going to see why it's so helpful to do. And compared to just using uh, an efficiency and then you're trading blind, you will quickly see how evident it is. Mm, yeah, unfortunately, this is not an edited video. It is live. You're gonna have to see me putting up with all this and making all this coloration and making all this adaptation. Okay, bear with me on that. All right, so now we have the 10 o'clock hour, and we're going to drop down into the 1 minute. So based on what I'm seeing, it seems like price is right at that level. Price is trying to go up, but it's remaining below the 50%. Let me see if I can put it on the trade so I can get my maximum leverage here. Okay. So what I'm saying is if all the bodies remain below that 50% and it leave the top of it untradable or untraded, then I know there's a high probability the price will attempt to go much lower. And the opposite is for when price is bullish. If price get in and then just wick below and all the bodies remain on top, that means price is going to go back up. For now, in this case, for that 1 hour, for that 10 o'clock 1 hour Fibonacci, I say all the bodies remain below the 50%. To me, that signals to me there's a high probability that it will go lower. Doesn't mean it will, but it kind of give you a roadmap. It kind of give you an indication what price is trying to do. And we have our first fair value gap after 9:30 a.m. at the open, and we'll see all the candles remaining inside of that gap right here, which also could lead to problematic issues, right? Because whenever you see pricing inside of an efficiency like this or a gap, I call it inefficiency, a gap, a fair value gap. When it's staying inside of a gap like this, it's usually problematic. That means price is going to become very difficult, and so far as you can see, it's been very difficult. What you usually want to see is price to come in, make a quick wick, like one of those wick that you see here, a quick inside of an inefficiency or inside of a gap, and then quickly trade in the direction that you want it to be. When it's spending that much time inside of a gap, it will probably be best to just close the trade. But I don't want to close the trade because I want to make sure I keep some action for you guys. I cannot just preach theory and concept, but I want to show you when you have all of this back and forth inside of a gap like this, it's usually problematic, and like 7 times out of 10 is gonna go against you. Seven, like if it goes all the way up and stop me out, I would not be surprised. Yeah, so it will usually go in the opposite direction of what you intend. This is why sometimes I can tell what price is going to do. Like, look at it. It's a lot of wick. It's a lot of back and forth. If you don't know what you're doing, you're gonna be hesitant. You'll probably reverse and you'll probably try to chase it. It's not worth it. It's best that you stay out. So, how do you best trade it to know exactly what it's going to do? The best thing you need to do is whenever it trade out of it and then come back. Let's say, for example, it needs to go lower. It needs to trade out of it lower and then wait for it to come back. Or that next candle that's outside of it, the full body that is outside of it, and then you wait to trade below that half, and then that's when you'll be able to get in. So let me see if I can draw this out. So there's going to be a full candle just like this that's going to, let's just say, come out like that outside. Whatever that full candle is, there's two ways you can enter that trade. You can enter the trade right below this inefficiency here, or you can enter price right at the middle of that candle here. Whatever candle is going to come out, whether it's here or here, you're going to trade. Make sure you put a short here, or you can put a short here. And I will demonstrate that when it happens. Now, the $1,000,000 question is, why is it doing this and which way is going to come out? We don't know. I don't know which way and which side is going to come out of. We don't know. I don't know. Right now, they're just holding it. Somebody is manually touching this. It's manually preventing it from going either way. Who's that somebody? I don't know. It's people who got way more money than you and I over the next 100 years combined with all your families. They have more money right now sitting in their hands. and they're saying, well, we're not gonna let price move, so they're just holding it in this pattern inside of that box. I guess you know, and subscribe and share. This is some good information here. But the good news after that is whenever it truly come out of that box, it's going to explode. Right now, it's just building. It's building up. While it's doing this, there are not venture capitalists, but hedge funds. They're building their positions. The hedge funds know exactly where. Some of them knows where the price is going, but they're building their positions here. Whichever way is gonna go, and then they end up either make a big loss or they are going to make a big profit. To me, looking at the signature of this, it seems like it will be going lower. But again, at this point, to me, it's anybody's guess. And again, why do I think it's going much lower? Is because so far all the bodies are below that 25% and definitely below the 50% of that hourly candle. But again, that's the only thing I can go out of. And I usually put on my stop loss above, right above that 50%. And then if you stop me out, oh well. Yep, high resistance. Let's see. Are there any other news drivers coming up for today? Nope. I think 10 a.m. was the last news driver. Tomorrow we do have FOMC. That should be fun. Yeah, so tomorrow I will not be trading at all. I will not be available. And Thursday should be fun as well. Like right around four, four-ish after the market close. So there should be a whole lot of fireworks. Let's just say that. Yeah, look at this. Now, even though I think the price may end up going lower, the funny and funkiest thing you'll see is price will usually you if you look at the bodies, you'll see that the bodies are kind of like trending up. And that usually happen when price is bottoming out. Let me show you what I mean by that. You'll see all the bodies is just they're just leaning on the slant. And then it's they're taking their time and they build up and then it just shoots up. Usually what will happen. And that's another signature also telling you that price is going the other way around. So even though it may be inside of this consolidation, and then you'll see all these bodies just stacking up on top of this line right here. And make sure I can highlight it in red so you can see it. Yep. It usually happen like at the bottom. Let's just say price been falling, it's been falling, and then what you'll see is a whole lot of candles. They're just stacking up. They're stacking up. They're stacking up, and then each body's low is higher than the previous one. Each body's low is higher than the previous one, and then it'll just shoot up. But right now, this is not the case that we are seeing right now. It seems like it is heading lower. It's still respecting that 25%. The bodies are still below that 25% of the hourly Fibonacci. Again, let me take it up to 1 hour. See, this is the 10 hour, I mean, this is the 10 o'clock hourly candle, or maybe on your chart, it may say 9 a.m. Doesn't matter. But what you'll see, you will see big wick. Wicks or gaps. Okay. So if it is a gap, you're gonna grade it as such. And so far, all the bodies are below that 50% right here that I'm talking about. Yeah, right now would have been a perfect opportunity for me to get out. But hey, I want to stay put. Yeah, the bodies are still inside. The bodies are still inside of that gap. Funny how that works. And there's still way too many bodies inside of that gap. When it can potentially come out of it, 10:45. Yeah, yeah, it can consolidate literally for like 45 minutes to an hour. I've seen it before. No problem. Because remember, the market, yeah, they have nowhere to go. They are not in a rush at all. It can go in consolidation like this for the entire day. And just the same way it can go up for the entire day. And to you, it makes no sense price to keep going up like this. And because we have a Fed's rate cut announcement tomorrow, you will see this type of activities because why would hedge fund put all the money on the line? Okay, if there's going to be a Fed rate cuts tomorrow, so they'll just sit on the sideline, wait for the announcement to come, and then they'll be able to make a move from there. Now, when I say this, that doesn't mean they are reactionary. That doesn't mean they are reactive, but they don't want to put a lot of money on the line right now at this point. The hedge funds, not me. I'm not a hedge fund. Just in case, if you cannot see the gap that I'm talking about, let me make sure I outline it on the red so you can see. Look at it. All these bodies inside of that gap. All of them. All this is signature. The price is going lower. Let's see if it can take me down all the way here. See, as you can see, this body is not a full body that is outside. Okay, I'm talking about it has to be like a full body candle that is outside, and then wait for it to trade up into it, and then go lower. See, until you have that full candle body that is fully outside, it's gonna keep playing around. And if you're a new trader and then you cannot, withstand all of this, it's best. Let's say, for example, right now that I'm a profit, it's best to just close it out and be done with it. Or you try to stop all the way lower. If it stop you out, oh well, you cover your commissions. But like right now, yeah, man, it's still playing around. when it's gonna come out of that consolidation, it's either gonna be huge candle up or huge candle down. I think I should have stick with taking the profit here. That was a decent one too. How about that? My apology. So I went on mute because I had to handle a small affair here, personal affair. But even though I was attending stuff, I was still making some notes here. Um, like I mentioned earlier, when if you're trying to go short, whatever candle coming outside of that gap here, I mean, as you can see, this big gap right there is a big gap. Whatever candle is submergedly way outside of it, you can go ahead and take a short. And I mean, just rewind the live stream whenever you get a chance. Rewind the live stream, and I show you there's gonna be a box, a big candle here, and then the moment the big candle box come out, and then price is gonna go lower, come back into it, which is right here, and it comes back to it again right here, and you have to take your trade below the 50% of that gap, and it come real close to it right here, right at it. So you got two attempts to go short right here, and it's based on that candle. That candle is very significant because that is the candle. It's just like coming out of the water, right? And it's completely submerged outside, either into the water or completely outside. So that candle and that candle at 1027, these two candles are very significant. It's significant because that's the first candle completely outside of that range, outside of that gap. But also, this candle is showing willingness for price to stay outside of that range to finally coming outside. The opposite could have happened. It could have happened on top here, but now it just sort of happened to that it happens at the bottom. And I was able to take a partial here, and I should have kept my stop loss here on top, but again, human errors. What can I say? I'm not AI. So price knocked me out like this, but it's okay. So the only reason why I did not take a partial here like I wanted to is because I wanted that one candle when it comes down on that one partial to make up for the difference for the loss that I made here. So when I went short here, I suffered loss here. But from here, I believe 64 and to 34, that's a 30 points. That's a 30 points. And I suffered a 20-point loss. In one partial, I had a 30 points gain. And my stop loss, 64 was right here, 64.47. And then if it with that one, I was able to get some more gains here. So I made up for what I lost in one partial and gained some more here. And I'm not saying this to save face. I'm just saying strategically, this is kind of like how you need to think. The only mental mistake that I made is just that I threw the stop loss a little bit too low. I should have kept it break even or at least at the top here. So, but that's okay. You live and learn. I mean, even sometimes, even when you know all this information, it's still tough for you to execute on them because at the end of the day, price is still bullish. You got to remember that. So, price could have come way up here and then whip my face off. But in order to prevent any of that, I said, hey, this candle right here could be the last line of defense, but it kind of went past it. Now, at this point, if you would like to go short, which I probably discourage you to go short. But if it really, 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 if it hits you to go short, let's see, where should I go short? Yeah, I would definitely try to see if I would make a short right here at this level. Let me see, let me highlight where I would go short if I were interested to go short again. Living right here. But again, this is kind of like sometimes you have to use a little bit of thinking. Just like this candle is significant, this candle, also that big long candle pause, is also significant. If price muster the courage to go all the way up here and get on top of this, I'll be leery. You know what I mean? So what that candle, if I will take a look at this candle, let me see. I would not want it to go past half of that candle right here. Yep, right here. If you can just come up here and lightly touch this and then go short, that would be great. Yeah, don't chase when price is at the bottom like this, don't chase it. Just wait for it to come up and then you can go short. And what do you know? We are in the 10:45 to 11:15 hour. Um, like I said in one of the videos, I believe it was the hourly setup video. Whenever you have between 17 and 33, could be outside of it. Whenever you see a low is made running into this liquidity, there's a high probability it's gonna run it again when it comes closer to 10:45. But what do you know? This is 10:34, between 17 after the hour and 33 after the hour. So where's 17? What do we see? 17. Ooh, 17 is all the way up here. Oh my lord. So let's go ahead and highlight it. Yeah, you gotta make sure you design in a different color, making sure that you don't trip yourself. Good notation, it's always best, because you have all these lines. If it's not crystal clear on where they are and what they means, you're gonna get tripped up. So between 10:17 and 10:33, there's gonna be a price run into a liquidity right here. Bam. We trace, go short here, bam, lower right there. So, and more than likely it's gonna run into a liquidity here again. What you can expect, and at this point here, is price to go up. So as you can see, this is the daily upper with a value gap. If you didn't know. Now, how do I know that? I believe I made the annotation for it. Oh, I did not, huh? Let's see. Maybe I was typing into the wrong area. Daily fib. I think that's the daily fib. If you're not sure, let's just go back into the daily. Oh, look at that. It looks like a complete mess. So we have, let's double click on that. Yep, it was a daily fib right here. So it's a 1027 daily. The thing about trading is it's a journey. You have to take good annotation, you have to take good notes, you have to observe really well. The key few things you need to observe is what price is doing on a certain level, but how price behave around highs and lows. Like the lows, how it behaves, the highs. And as you can see, it touched the top right at that line. I mean, come on. I put in that daily fib at the beginning of this live stream. Okay? And It got really close to it, touch it, and then bounce back up. What did I mention earlier? If I wanted to go short, where would I go short? In this particular area right here that I highlighted. Okay. Is it gonna go short? I think so. We'll wait and see. But if I were to go short, I will go short right here again. Why am I not going short right now? You don't want to overtrade. There's this part also right there. That psychology of it. You don't all this gain that you make, you don't want to give it back. So you can just sit out, observe, make good notes of it, and if it end up going in the opposite direction, you didn't make a loss. If you end up going short just like you intended, you make it as a note, you take a screenshot, you study it in the future to say, okay, you kind of predicted price will go lower there because of this breaker. So high, low, high, high in that breaker into a particular area right there. Going short, and then if you go short, you make a good note on that. And then that will build your confidence in the future on how to make those trades. Okay. Um, but what do you know? So price on that fib just land right on top of that on that 70% top of that fib for the daily, hit it and bounce right back up. Man, I'm not making this up, guys. This is how things are scripted. Yep, this whole thing is scripted. Now, how do I know it'll probably go short again? It's because there's a relative equal low here, right? So you have this low, and that low. There's all this stuff here. And then there's that 50%. It's unfinished business. See, now it's going short again, just like I mentioned. Um, it's not done yet. It has to go below these lows here. So I'm anticipating that price is just gonna go short here, and let's see how far deep it can get into. I'm I'm keeping my eyes on that 50% 958. This is where I think price may end up going. And that will be in the middle of the afternoon PM session right there. See all this stuff you have to keep in mind. So you have this daily fib here, right? That will highlight the daily fib, and that Fibonacci is for the wick on the daily, and that Fibonacci for the wick on the daily is sitting right at the premium for the PM session. See, everything is just fractal. Everything is merging to each other. And if price needs to go up, is it going to stay in the premium, or do you think it's gonna go into the discount, deep discount here, and then bounce back up? To me, if you ask me, it's going lower in the discount section here. Also, why into the discount section? Because in that 50%, you have all these lows here. All the retail traders think that the stop loss is protected here. And then this is where price is gonna come and hit your stop loss. Don't you ever feel like sometimes like the price is chasing your stop loss? Yes, it does. That doesn't mean they see your specific stop loss, but it's because of all those books that all these people publish over the years, all these videos that they publish over the years. You put your stop loss here. They know. Well, they've been training you for years, 100 of years, years to for you to trust your gurus and people out there to put your stop loss here. And which is why they script this, they program this to target your stop loss right here. And me, knowing that's how they think, knowing that the elite and the people who create this that they are greedy, that's what they do. I will go short from here and I will target your stop loss right here. And it's going to be into the discount on the PM session right there. And it will go to all of that over the overnight session, the London session, and all of that. So that I see that's what price is going to do. Now you may say, hey, listen, maybe 2 3 hours from now you can say, hey, uh, whatever you said didn't happen. He did not go all the way down there. But I'm gonna tell you this. What did you see after that? It rips all the way higher with a lot of energy. There's a big green candle that went all the way up. That's what I'm going to tell you. Because at the end of the day, if price doesn't get into the deep discount, that means price is really bullish. That means they're really trying to push it up. Meaning there's a level they're trying to meet before they push it down lower. So they're not even gonna bother to push price lower. So if they're not gonna bother to push price lower here, that means they're extremely bullish. That means they want to push this up as much as possible. Just because I have a theory or I have a sentiment, just because it didn't happen doesn't mean it fails. It just proves the other theory. Because as you can see, price can either go up or down. If it fails to go lower, that means it's gonna go significantly higher. So that's what you kind of have to keep in mind. See this one right here? What did I say? I said I'm intending to go short. It acts like it's going short, but it's still spending a lot of time in this particular area right here. If I was in the trade, I would have killed it like instantaneously. I would not even hesitate because when you have this key signature here, a high right here, let me make sure I can highlight this. When you have this key strong signature, a high, a low, and a high, and price is dilly dallying around, taking this time, and it barely gets there, and or which in the top of that wick, and then come back, just reverse it. Don't even waste time. Don't even try to figure out. Don't try to find out. If you reach that level here and it's going back up like this, it's going back up. Okay. So if I was in the trade, if I took a short in order to prevent me from giving it all back, I would have reversed or close the trade. At best, close it. Right. So where are we right now? It's about an hour and 15 minutes. And yeah, I think I can give her a couple more minutes. Try to see if I can drop some more gems. All right, come on, hit the like button. Let me know what would you like me to cover. Post in the comments. Let me put something on the comment section here. Yeah. So this and why this high low high high. So this concept of a breaker, it was coded by ICT. I'm gonna give ICT's credit. So that was his concept that he developed, and it is a very strong signature. To me, this is my go-to. That breaker thing is my go-to. I mean, to me, it seems like the market is very obedient to it. There's been a lot more success than failure with this. There are other, I'll say, structure that is powerful, but to me, so far, I haven't seen anything else come close to this. And the only reason, the one, not the only, one of the reasons why this is so powerful is because again, you have people when the price start going lower here, people think they are safe. They put a stop loss here, and then price come back up and just yank them out very quickly. And by the time we yank him out, hit the stop loss, he never came back or he barely came back. So to me, any signature that prove or any signature that show that it's a manipulation, and then they're gonna fake you out to clock you out or clock you clean or clean your clock. To me, that's a strong signature. So again, you put your stop loss here, you think you're safe, and then you boom, yank it out. So to me, that is a very strong signature. You can almost say the same thing here. So I put my trade thinking that I'm safe here, and then boom, yank me out. So anything like this, any structure like this, any trade, any form of setup that is like this, where you see a very strong signature, where it will be very safe for for traders or retail traders to have the stop loss there, I will closely examine it, study it, look at it. It doesn't have to be this. It could be anything. Which is why after this live stream, I'm going to study this. Like why before 10 a.m. Why do we have this big candle here? While at 10 a.m. I was expecting that movement to happen. Why did it happen so much sooner? So when you're a trader, you always got to keep studying how you trade, your psychology, your methodology. It's a never-ending learning, and there's always going to be a model for me to select from. So I know I came up with the combo breaker model, but there are so many much more, And ICT himself has a whole lot of model. So the combo breaker model is a model that I codified and came up with. There's nothing fancy about it. It's just a whole lot of faking. instead of a instead of a one pump fake, it's two pump fake. So that's pretty much what it is. It pump you out, then stop you out, and then keep going back up. That's what the combo breaker model is pretty much. And you kind of see a little bit of this right here. It act like it's going lower and yank you out, and then try to go back lower again, and then now at some point it's gonna stop you out again. So that's what the combo breaker model is. It's an extra stop out, and you can prevent all of that by just looking at these like these efficiencies or these inefficiencies, and then try to see if it's spending too much time inside of a gap. If it's spending too much time inside of a gap, it's time to bail, more than likely. If you don't know where it's going. So let me see. Right now, so around so around 11, we have London close coming up. So we have a 10 a.m. high, which is right around here. We have a lot of relative equal highs here. It's inside of the 10:50, 11:15 a.m. So let's see if we can pop a new one right here. What am I aiming for? I'm aiming for this relative equal high here. If it tries to come back lower, I'm gonna get one more. But right now, I just put one single contract, and let's see if we can get it up here. And again, you see, like inside of that gap that I see. Now, if price is gonna come back, it's gonna come back inside of that, in the middle of that candle, or right on top of it, to grab one more, and then it can go higher. So inside of that macro time, I'm aiming for that high right here, the 10 a.m. high. So why am I setting it up like this? Because it's a bullish environment. Price went lower. After it went lower, we inside a macro. It's always scripted to hit the relative equal high at 10 a.m. See, it's in a hurry to get there. What I could have done is get a quick trade here and try to see if I can get in again right on top of this with a two and then go higher. Wow, look at that. Touch right on top of it very nicely. If you can see it, let me make it closer. Boom. Give me one more. Now, can you go down lower and hit my stop loss? Sure, you sure can. And if it does, I will be studying why it did. Because if we're in a bullish environment and we're inside the macro, and I'm getting inside of actually, you know what? Let me move that stop loss right here. And I'm inside of that macro, and I'm getting inside of that inefficiency here. The only way it needs to go is go up. But hey, we wait and see. Maybe that gap here that was part of the bearish breaker. Maybe that was his key signature to go much lower. But I don't think he hit it. I think he came real close, but he didn't touch it. See? Yeah, he did not touch it at all. I mean, it got real close. Ah, man, these price engines. All right, let's see if he can give me that partial here and see if I can get that one to completion. And then after that, I will close the live stream. Or if you stop me out, I'll close the live stream. Either or. So talking about like a bullish structure. So we have a low, high, a lower low, and then there's this gap here. Maybe you can see it. You know what? Let me do this. Where should I get it? Right here. That's a big gap. Now, you may think, okay, why didn't I pick it right here? I mean, I could. It's not bad. But because this body is so small, it's insignificant, I take it all the way up here. Okay? So that's why I do that. And you can see all these bodies inside of that, all these bodies here inside of that gap. Yeah, it was no bueno, man. All right, let's see if it's going to at least reach this target. To me, this is a bullish structure. What's that? Come on. I just do this for a visual, but it doesn't mean anything. I've seen people with the charts and then they have all these slanted lines. Man, those slanted lines means nothing. To me, I do it just for visual representation to show, hey, it's showing sign of bullishness, but you can just pierce through. There's nothing magical about that line. The magic is here in this one. The low, high, and that lower low. Whoever had the stop loss here, pump them out. That's where the magic is. Part of the magic at least. So the idea is price is bullish, it will trace lower to go higher. And it was right on top of that daily fib, right on top of it. Did not even get nowhere near the 50% there. And start rallying higher and then use that bullish breaker as a structure to keep going higher. Now, oh man, just because it's doing this doesn't mean it's going to rise. It's gonna that doesn't mean it's gonna keep going higher and higher. It just means that okay, they're gonna rally here, clear those relative equal highs right here, and then it may fall off, going back lower, or it's going to keep going higher, or it may go sideways for the rest of the day. From here, I'm anticipating it's going to be huge, like a big candle, to get to all of this. See here, yeah. I'm expecting that it's just gonna go one big candle, whoop, take that one out, and come real close, and another candle just take that one out. That's what I'm anticipating. If it doesn't do that, then it's gonna keep going sideways. It's gonna take a long time, and what I'm gonna end up doing is trigger my stop loss, and then just be gone for the rest of the day. See, it's already looking problematic. All right, come on, go ahead. And again, this is what I mean. Like, okay, people, somebody at some point went short here because I would have anticipated to go short here. Okay, um, and what price is gonna anybody will go short from here, this level at 26.56. Anybody will tend to go short here. Price is gonna try to take them out, and when it's going to take them out, it's gonna take them out very quickly. It's part of trading. It's nothing exciting about it. You just gotta sit and wait. It's going back and forth, making you doubt. That's making you doubt your own trading plan. You just gotta sit and wait, and they may stop you out. And when they stop you out, what are you going to do? So yeah, look at it. It's going back and forth. It may end up stopping me out. But all this is engineered. All of it. Look, this is engineered price action. Come up, create these relative equal highs. It's still inside of that 15 minutes after. See, when I mentioned earlier, all these phantom lines, slanted lines, guess what it did? Pierce right through it. And all these lines are phantom lines. They don't mean anything. Even graphically, I show, oh, it's showing sign of bullishness. Pierce right through it. Nothing magical about it. Even the Fibonacci's, there are nothing magical about them. I mean, again, like I said, it's a roadmap. Just take a look at your car. You have a speedometer. There's nothing spectacular about the speedometer. Yes, it can prevent you from getting a ticket. It's gonna prevent you from crashing your car. But there's nothing magical about the speedometer in your car. Same thing. Same thing for the Fibonacci. Same thing for all this market structure there. It can break through it. It can go right past through it. With all these manual interventions, especially right here, it can go just straight through it. The only thing you can do and can control is yourself. Not put in a whole lot of trade. Do not chase price. Like when it comes really high like this, trying to chase price. And do not over leverage, and then do not over trade. The only thing you can do is to protect yourself. Protect your mental capability, protect your capital gain, protect your mental capital. Don't think too much through it. Just take a trade, run it, see how it works, and wash, rinse, and repeat. And then find favorable conditions for you to trade. What are the favorable conditions? A wick inside of the gap. But this is no bueno. I mean, just like I mentioned earlier, any action, any lots of candle you see inside of a gap is problematic. Yeah, the gap is all over there, but that gap affects everything that goes on the right hand side. Okay, so when you see all this action inside of that gap, it's problematic. I mean, if you don't have the mental fortitude to stick with it, it's gonna you're always gonna second guess yourself. You're gonna reverse. You're probably gonna make a bad trade. You're gonna overtrade, and it's gonna frustrate you. So yes, that gap here is affecting everything else that's happening over there. That one right there. Just because there's another candle that go right through it or around it doesn't mean this one is not affecting this one. This gap right here is affecting everything else going on the right hand side. Why? Because that gap formed after 9:30 a.m. Also, that gap is the gap that break the camel's back. Any of the traders who had the stop loss here, take out the stop loss. So that's why that gap is significant. And that's why you're seeing all this price action here. Even though it was a manual intervention, but they did it inside of that range. All right. Doesn't seem like this thing is going anywhere. So let's this down right here. So around a gap, when you're looking at a bullish value gap like this gap is also significant, which is why you see there's support here. See, price is not getting there yet, and price is refusing to get there. So there's this gap here significant. Let's see if there are any other gaps below that are significant. I mean, we can drop into a lower time frame than this. Let's see. Uh, see, there's another type of gap I would like to show you that I saw yesterday. And I'm glad I remember that I can do that. If it's going to let me there. Okay. Yeah, I don't even care about that trade down there. um, man, but because of that, can I show it right? Um, So even though you don't see a clear, obvious gap here, doesn't mean there is no gap. Okay. If there's a better way I can show it. So just like I showed that gap on top, like the gap is between. So let me see what I mean by a clean gap. Oh man, not even. So that's a clean gap right here. Okay. So this is the high. There's a high. There's a body, and then there's a low of that candy. So that's a clean gap. But sometimes some of these gap they are not that clean. Okay. So what you need to do is take a look at this week that passed by here, and then this is another week that passed by here. So these 2 weeks they overlap with each other, and essentially it is a form of a gap. So what you need to do is ignore those wicks and then use the body of this candle here and the body of that candle here, and then this is your gap. And as you can see, price went higher, which was lower into literally at the 50% of that gap that I highlighted here, and then keep going up and sideways. Man, that's a lot of technical stuff in this thing. All right, come on. Now this is the other part, that gets you frustrated. It's just like now it's taking the sweet time. It's not making a big move like I thought it would. So 9 out of 10. If we're not getting that big move candle here, it's just going to go sideways. And it's about to be lunchtime, coming close to London close. More than likely, what I'm gonna try to do is take my partial early and try to get out of Dodge, pretty much. You know what? I can move my stop loss right here. This is the exciting part about trading. You're just gonna have to wait, just like a lion. You sit and wait, and it's gonna retrace against you, and it's gonna strike a nerve, and then there's gonna be a big run up against you, and then it's gonna feel like it's gonna go in your favor, and then you say, all right, let me wait and see what happens, and then got well close, and then retrace a lot lower. Talking about well close, let me move mine a little bit lower because it has a tendency to just miss your target on purpose. Yeah, this is one of those things like, what is going on here? I wasn't expecting all that mess. Even though he had a good run here from here to there, I literally missed it. But at the end of the day, I was expecting all the sloppiness here. I mean, that's a lot. That's very sloppy. And I think what I'm seeing here, yeah, it's going to be very delayed. The delivery to my target is going to be delayed or denied. All right, so let me take a look at seasonal tendencies. I just want to talk about something else here. All righty, so we had a drop lower the 22nd. The 24th on Friday. So it was Friday on the 24th? Keep forgetting, man. Okay. Yep. Friday was the 24th. We're going higher and higher. So it seems like that rally that we see on November 4th may have come a little bit sooner, but you never know. So that's how we're looking right now. Let's take a look at the VIX. It's on a stalemate. See, it's just the quiet. The market is just quiet, man. Let me see if there are any divergences. So we got a low here and a higher low. So for ES, we have a low here at 945, and we had a higher low here. And it looks like NASDAQ is heading back up also. NASDAQ made a lower low, and it looks like it's heading back up. And we have Dow also failed to make a lower low. Yeah, I don't have much faith in the Dow. Dow does whatever it wants. Yeah, it's just like everything is in limbo. It's like halfway. So you have the New York Stock Exchange is kind of on the red, and then you have Nasdaq is on the green. Yeah, it's a stalemate. I mean, everywhere it feels like it's a stalemate. There's a stalemate here on the dollar, a stalemate on the volatility index, and higher low, lower low, higher low. Yeah. Yeah, until we see big surge up. I know. So I have to wait in the next 4 minutes to see what price does. And let me take a look at one last thing here. Okay. So we have the Magnificent Seven here. Since all the charts, take a look at all of them. They all behave differently. Got Microsoft doing this thing over there. Now, how does that affect price over here? So we have Tesla going up. We have Meta going up. Amazon going up. Let's try to see if NASDAQ futures can pull all these babies up. I mean, no one individual stock is going to push the market like on the normal days. But if there's like a quarterly earning, that one stock may end up pulling the Nasdaq, which Nasdaq is gonna pull all these other ones. So it's like a domino effect. Okay. Let's see. Let's see where we are right now. It's really sloppy, man. Yeah, I can't stand that slop. It's very lethargic. It's a lot of wicks. It's a lot of back and forth. Okay, coming out close. We got 1 minute left before London close. Yeah, if we don't get any price action after that, I'm shutting it down. And this is another reason why you don't want to put big contract or multiple contract because of all this back and forth. I mean, imagine if I had 2 minis or if I had, I don't know, 15, 10 minis. I mean, any one of these pullback and retracement is going to affect your account. See that? Slop. Another slop. Yep. London close. Maybe hopefully the market is gonna get loose after that. If it is gonna get loose on the way down or loose on the way up. Yeah. I think it's gonna go back down. Yeah, there you go. It's about to pull. Man, forget it. Let's see what the VIX is doing. Yeah, it looks like it's finally gonna come out of this slough right here. Yep, VIX is going up. So that means price is going to go down. And if you miss what I meant is this. So the VIX is measuring the volatility index. The higher the volatility index goes, the more downward pressure there is. Okay. So if price is going down, that means for the VIX, that means price is going up, especially for the Nasdaq and the S&P. I don't think it ever used to be that way. I think the volatility index used to measure like if there is a lot of spikes, a lot of movement back and forth back in the days, but it's been slowly changed or recalibrated a little bit. Now it's more a little bit more straightforward. If this goes up, then this other one goes down pretty much. Yeah. So right now would have been a good opportunity to probably reverse and go lower. But again, I'm keeping an eye on this one right here. I mean, it just wicked into it. I mean, what is it you're trying to do? Let's go back. Yep, it's going lower. It's pushing it down. And as long as you guys are here, I'm just gonna keep this one going a little bit longer than I need. So let me show you the reason why I reversed. Not that I needed to, I could have just closed it, but there's price went up, went on the stall right here for the volatility index, and then now it's nudging higher, increasing the pressure for price to go lower. And now you can see the ES is going lower, Nasdaq is also going lower, and the tick volatility index is also pushing the pressure to go much lower. I should have picked up on this. Let's see. Come on, man. Show up. There you go. Yeah, the moment you had a fail higher high and another fail one, another fail one, that should have been my indication to say, you know what, I don't think price is gonna make it back up. That should have been my cue to either close it here. I mean, I've been calling out to close it because of all the sloth inside of the of inside that gap. But I just wanted to keep it going to show you that how difficult it is to predict price to go to your particular target when you have all this consolidation inside of a gap. So that's that. I mean, how much lower is gonna go? I don't know. So we'll wait and see. 16 points. Got it. Damn, tag me out. Bingo. Okay. I guess that was fun. Oh, I think I know what happened. I only had one contract because I reversed it, only reversed one. I added a second one here, but when I reverse it, it doesn't reverse two contract that I put in. It reversed one contract that I originally had, which is why when it tagged it here, it only tagged one contract back. Okay, that makes sense. So I was like, wait, why did the whole trade collapse? I had two, and I wanted to take a partial here. Makes sense. And now let's see. Is that a retracement higher to go lower? You bet your bottom dollar. Yo, just in case you doubt it. The moment Nasdaq kept going back up, the volatility index just keep on dropping. And this is 15 minutes, by the way. Yeah. So if I get enough like on this video, I can show you how to set this whole thing up. I mean, this whole thing for me, this is more like a speedometer. You know, when the race car drivers, not only they have the speedometer, but they have the fuel gauge, and then they have the engine pressure gauge, and then they have the nitro. To me, this is kind of like what that is. Um, Having it there, it looks complicated, but it's a good thing to have to see all everything that's going on all at once. If I didn't check what the volatility index was doing, I would have been reluctant to reverse. But because I saw what the volatility index was doing, it looks like it was on the stall and it started nudging higher. I knew the pressure was going to come on. And it seems like for the ES to clear out those lows, nope, not yet. So to me, I think for the Nasdaq, there's a lot of unfinished business. How long is it going to take for the Nasdaq to clear out these lows? I don't know. It doesn't have to, but at the same time, I don't see any eagerness for price to go higher. I mean, it's just in there and then it's spinning. This one here at the bottom is a tick for the Q. This one, it is a tick. I think this is for the overall market, but it's mostly looking at ES. But this one is specifically looking at Nasdaq. the Nasdaq seems to be a little bit more volatile. And so why do I have all this? So that one is to measure volatility. That one is to cannot get a clear direction where price is going because the dollar, this is the dollar index, it affect how price is moving, just like in Forex. When the dollar goes down, every instrument in the Forex go up. And same thing, all assets, Nasdaq, you name it, if it's going down, that means those assets are going up. It doesn't do it pound for pound, flesh for flesh all the time. Just because the dollar is going down doesn't mean it actually has to go up. But it's a very high probability that the other asset will be going up. To me, the volatility index is a little bit more pound to pound. I mean, it is a completely mirror of what all these instruments are doing. Let's see, this is a tick for the overall market. And this one is looking, is this the volume? No, that's not the volume. This is more like I forgot what that one is about. It was very significant too. Oh my God. So this operates when the market is open. I think it's like a advance, like a cash advance, advance market, like how much cash is being pumped into the market. It's also, I don't think it's looking at volume. I think it's just looking at, okay, where's the all the cash is moving? Is it moving toward price asset to deflate or toward price asset to inflate? Obviously, if it's lower, I mean things are deflating, and if it's above the zero line, that means price asset is inflating, meaning they are pumping money into the market. Um, it's like this is kind of like what it kind of gives you. It gives you a feel for it. That's not the end all be all. Just because this is below zero doesn't mean everything is gonna keep falling. The market is gonna fall apart. It doesn't mean that. It just kind of like give you a gauge on where you at. Again, the gauge on the core is not the magic. It's just a calibration of where you are and how things is going. It'll be the same thing for this. It's measuring volume, what all the volume of the trade is going on. I mean, we're getting a very low volume compared to yesterday, or we're getting a much more volume compared to yesterday. Just because we have a lot of volume doesn't mean price is going up. Price thing could be, I mean, the volume here could be going up, but it's going in the opposite direction. That means going lower. Okay. And this one kind of measure the same thing. This one is a tick for tag, meaning you see this one below zero, that means it's deflating. And when it reach 1,000, whew, let's say for example, you're trading the Nasdaq and you see this tick level here. I'm talking about this tick here. If it reach 1,000 and it stay there, I don't know, for 30 seconds, 1 minute, and then you see price in the Nasdaq is pumping up, just get ready and take a short right here. You might as well just take a short. Yeah. And then kind of like almost the same way too. Like let's say for example, price is going up and up and up and up, and then you see price is dumping a little bit, is going lower and lower and lower. Just get ready for a long, and then just go long here. And if it's sustained there and stay for 1,000 for a long time, like right above this level, prices are gonna keep pumping. And you usually see this scenario when there's a Fed rate cut. Hey, I just saw the question here. I am based. Yeah, I'm right. I'm right outside of Pennsylvania. Thank you for your question, Easy Games. Thank you for participating. I appreciate you coming here. Let me know if there's anything you'd like me to cover or discuss or anything you don't understand. And if I cannot find the answer for you right now, I will look into it for you. Okay. What was I saying? So yeah, so talking about this tick size here. So yeah, so let's say for example, there's a Fed rate cut coming tomorrow. I mean, if you have this on your chart, just watch it. They're gonna announce a Fed rate cut, and then that thing is gonna jump to 1,000, and then you're gonna see price skyrocket because Wall Street they love cheap money, and when they turn that printer on and then the Fed start printing, they know they're about to get flooded with cash, and you're gonna see this one screams higher. So that's why I say I had a video come out and say there's a major storm coming up this week. I mean, doesn't mean it's bad. It's just there's going to be a lot of volatility coming tomorrow and Thursday, and probably eventually into Friday as well, if you ask me. Oh, thank you, Easy again. I appreciate it, man. I'm trying to put it out there. Trying to see if I can do more live stream and pump out more videos, kind of like share the knowledge because we're about to hit, financial hard times. So I have some of this knowledge there, and I would like to share it with people. So I think the more you can do this, the better. Even if you don't make a whole lot of money, but at least have like $100 that you can just carve out from the market. It will help out. I appreciate your comments. Thank you, man. All right, so let's see what else is going on here. Yep, slops. Sloppy, sloppy. Yeah, I mean, to me at this point, if I wasn't live streaming, I would have just shut it down and just do something else. I would have go outside, play, kick a football or something. Um, I don't only trade Nasdaq. I mean, I do trade other instruments. I do trade the ZB, but the ZB is it's even more slower. I mean, the ZB takes a long time. ZB is the 30-year bond, 30-year yield bond. It does you get a lot of money from it. I mean, if you're outside of the US, I don't think you can trade the ZB or the Nasdaq, but you can trade the US 100. I think for the S&P, I think it's the US 500. If you're outside of the US, you can trade those. And I would rather trade futures or US 100 than the forex. I mean, forex is tricky. Um, I did not trade forex a whole lot, but forex can be tricky. I mean, especially right around 2009, when I think it was a Swiss. I think it was a Swiss who got depegged from the dollar, and those people who had the money in those forex account. I mean, they got wiped out. And I'm not saying that cannot happen with the futures, but futures market is a little bit more gentleman. I can predict more or less where things are going. For forex, it's very tricky territory, and then you usually in forex you have all this spread, like it's usually all this wick, okay, and then if you look at your friend account, you would not see a big wick like this, but in your account there's a big wick. Like the broker can push things around and stop you out unnecessarily. I mean, even the difference between Nasdaq Micro and then the Nasdaq Mini, there's discrepancies between there. So, like if I go into the NQ, you probably would not see such a long wait. You probably see a shorter one. There's slight different discrepancies in between sometimes every now and then. So, but the 4X, whew, I'm not saying it's impossible, but man, yeah, the forex can get tricky, but it's tradable. I mean, it's the same concept. You will see the same things, whether it's Bitcoin, whether it's Nasdaq, whether it's Forex, you're gonna see the same things, the same setups, and all is going to be affected by the volatility index. It's going to be affected by the dollar. All these things still affect your trading and price action. Yeah. Oh man, I think we have reached the 2 hour mark. Um, what about gold? I don't trade gold because gold is another asset that is highly manipulated. I mean, right now, lately, over the past month or so, we've had gold pushing up a little bit. I mean, people had the gold bugs. They've been waiting for gold to push like this for years. But yeah, I don't mess with gold necessarily. I think I have trades on gold, and the first one I make some money out of it, but the second one I lost, and I lost big. So I'm like, you know what, gold is probably for not for me. I mean, when it comes to gold, you also have to look at a lot of other stuff. You have to look at the what's the commitment of traders. There's a lot more homework that I have to do in order to trade the gold. I've also traded the wheat, the grains. Those are fun. I mean, when it comes to grains, I mean, especially the commodities, when they pick up. I mean, especially if you understand what's happening geopolitically around the world. For example, when you have the WAR that happened in 2022 in some country in Europe, so the grain was going like parabolic. It was going parabolic. So I don't want to name names because the YouTube can get a little bit sensitive when it comes to saying certain words. So I'm just kind of dancing around a little bit. But if you think about it, in 2022, there was something going on in fall in Europe. And yeah, so the commodities, some of those commodities were going up because that particular country over there produce a lot of grains. They have good good grounds and all that stuff. I think what other commodities that I think may get pushed up. But now I think energy, maybe oil. I mean, I'll be on the lookout for that. There might be some spike going over there. Gold maybe trace lower, but I think gold is gonna go back up. It's gonna go, I would say, to 4,800 by the end of this year. So if you really like trading gold, I would say probably by the end of the year is gonna reach 4,800 because of all these other things that again that's going on in the world. Yeah, gold's gonna get pushed up. But right now, I think it's retracing. What is the symbol for gold? Hold on, let me see if I can pull it up. Gold futures. Mhm. I think it's GC. Come on. Yep, MGC. Let's take a look. Let's take a look at the daily. Daily is my favorite go-to to see how it's been behaving. Yeah, that's a nice run, bro. Whew. Yeah, since 2022. Yep, it's been going up and up and up. It's funny that in 2022, in the year 2022, something happened there relating to what I just discussed, WAR in Europe, and since then it's been going up and up. To me, I think gold is highly undervalued. I mean, this thing should have been at 25,000 at this point, if you ask me. It's a highly undervalued market. It's going to retrace. I'm trying to let me see if I can picture where it's going to retrace into. You know what, Easy Gang? I'm gonna cut out a video to kind of give you a good prognostication where I think gold may retrace to and how far high up it's gonna go. I know it's gonna go up to 4,800, but if you were to trade this, I'm trying to see decide where it would go. Obviously, the best thing you could do is to do this. Figure out what was the lowest low, and then come on. If you're in any doubt, and if you're in any doubt, you're trying to figure out okay where you can potentially get in. If I was trading gold, I would wait until it was below 38.51. We'll get in a good discount either right above here. And then if it keeps going much lower, if you have the stomach to take all that retracement, all that drawdown, then yeah. But me ultimately, if I were to go in, I would wait for 35.83. If you're not in a rush, wait for it to retrace to 35.83. But definitely 31, 38.51, that particular area here between, let's see, 37.46 and 38.78. I will wait for it to retrace in that particular area and then just go long. That would be my prognostication for this. And then use a very small account and like a very small size, a one contract, and then bam. That's that. But yeah, I can cut out another video for you and then I can give you a better prognostication on this. Let's see how we're doing on the monthly. Man, yeah. Yeah. It's been on a tear, man. But still, like it's the intraday volatility that makes it a little bit difficult for me to stomach. So yeah, I'll wait. I'll wait in that price area to get in. Any other questions? All right, this again. I'll make a video just for you about gold. Okay. All right, guys. I gotta run out. Thank you for joining in. I appreciate you staying in for the live stream. If you have any questions, feel free to reach out. Post a comment in my tab community section. Interact with the people there, and then let me know any topic you would like me to cover. I promise you, Easy Gang, I got you. I'll do something for gold. Thank you, everybody.